Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. If you guys are looking for undervalued investment opportunities, click subscribe, give me the thumbs up button if you like this content. Today I want to go over, I call this viewing investments. It's a wide array of things to give you an update. CRB, different types of ratios, all those things are included in this. I do some just straight out price charts. There's something I want to go over before going into this clip. And what I want to go and talk about real briefly is, if you guys are looking at things this far in front of you, you are blind. You're blind. If you see something go down and it goes down for like a week or two, everyone starts saying, it's deflation. Oh my God, it's deflation. And then it goes back up for a week or two, then it's inflation. Things don't change that rapidly. If you want to be a good investor, you can't look at, I'm going to give you an analogy. If you're driving a car, a very fast car, and you've got a track that you're going around, there's certain parts of the track that you go slow in, you enter slow to go at a very fast exit speed because the exit is very long. That's where you make up your time. You want to go as fast as you can over the longest distances. And then you'll get faster and faster as you refine those corners before those big straights. What you want to do in investing is you want to position and align yourself for the big moves. You might have to sacrifice some of the short term in order to gain the most in the medium and long term. And what we're seeing here is, if we get the long term right, and this is what I'm going to go over in terms of viewing investments, if we get the long term right, the short term noise is buying opportunities, but you have to get the direction right. Now, I don't know of a long-term deflation outside of a demographic-driven deflation or disinflation, I should say. It's not really deflation, it'd be disinflation, which means that the inflation rate is becoming less and less over time. And that's usually demographics-driven. What I think is in front of us is massive inflation from a variety of different reasons. One, money printing, they're just flooding flooding the whole system with a bunch of money. That's going to be inflationary if they're literally sending checks in people's accounts, which they are. Then you've got the expansion phase of real estate, which is an inflationary period looking at history. If those conditions are right, if we nailed the real estate market, which these things don't change quickly, they change slow. We got to view our investments like we're going on a very long plane ride. You're in the plane, you can't do anything. You can't jump out of the plane. You can't change the direction of the plane if you're not driving it. You're just sitting in there. And you have to be patient, but you know you're going to some destination. You know it's going in that direction. We can't control the things outside of that airplane. We're in the plane and we're along for the ride. And sometimes you kind of just zone out. You forget about what's going on in the account and you just go. And you just be patient, you wait. That's what investing is. It's nothing more than just being patient and waiting on a long plane ride. So I'm going to go over some information here on viewing investments. If you get the big picture right, that's where I think a lot of money can be made. If you in the short term, it's going to throw you all around. It's going to feel like you're on this wild ride. And if you can't handle the volatility, then I would suggest that you got to pull a little bit of money back. Remember, I'm doing 20% of my overall net worth in these types of higher volatility investments, but I could go more because I have the risk, not really risk tolerance, the volatility tolerance to it. And I think the opportunities here are insane. Insane. I've never seen them this good. But the time frame you have to nail down yourself. I can be here, I can mentor everyone here, I can coach people, through things, but we need to keep the eye out there. And you're going to get all these obstacles coming at you. People, they're going to try to suppress this down. They're going to try to hold commodities down. They're not going to want inflation to come. It's all bad things. People are going to view it as bad things, but really the driver is the money supply. That's going to drive massive inflation here. So I'm going to go through this presentation talking about viewing investments, how you should be viewing things, what we're seeing in the markets today for current market conditions, and my opinions on those. So let's jump in. You're going to lose me. And I call this viewing investments. And some of the stuff I go over, and I'm going to continue to go over it, time and time again. This is the real interest rate. Again, this is the difference between the M2 money supply, which is the black line, and the red line, which is inflation. This difference is the blue line. And when the red line goes above the black line, the M2 money supply, that means that you're going to get a very large real negative rate. So it means that we're in negative territory. We are very largely negative, and this is considered to be a real, so it's a real interest rate. It's what the market sees as a real interest rate. And when it's below zero, it's considered to be a real negative rate. In a real negative rate interest rate environment like we had in the 70s, all the way to 1980, in this time frame here, is very positive for commodities and inflation. Inflation is increasing at a faster rate. Oh, this isn't M2 money supply. Sorry, this is the nominal rate that they set, and this is the inflation rate. Sorry about that. So this is this is like the 10-year yield. And when inflation is greater than the 10-year yield, you get a real negative rate. Sorry about the M2 money supply. I keep looking at all these charts. So this, as we get into these negative rate area, precious metals and commodities do very well. So we're in an environment where commodities should be doing incredibly well. Here's the CRB index to SPX ratio. I'm zoomed in on it. This is about a year's worth of data, maybe a little bit less. And we're putting in this gigantic pennant formation flag pattern, however you want to say this, and we're moving. And I think they're trying to hold this down. Sell off here, it was going to break. Sell off here, sell off here, sell off here, sell off here. Notice all these big, large down sell-offs in here, like someone's trying to hold this thing down. But you know what? I think over time, there's no way you're going to hold this thing down. The money is going to flow to the undervalued assets. The money's going to flow under a real negative interest rate environment, real negative yields, I should say. This is going to go much higher, much higher, because money's going to want to flow into real assets, into hard assets. And this is a ratio saying what's hard assets in relationship to the S&P 500. And right here, it's putting in a large flag formation, which when it breaks to the upside, I think we're going to see fireworks here. Now, zooming out, we see a downtrend line break, and we're right there. We're putting in the big pattern. We've got a pattern within a pattern. So we broke the downtrend line, which is, I consider this a pattern. We broke the downtrend. We're putting in this big flag pattern, and we're about to launch higher. So I view this as a buying opportunity. I don't view this as a selling opportunity. I don't view these deflation guys, I don't think are right. This chart wouldn't be painting this picture if they were right. This is painting a massive move coming. It is painting a move that we, on this channel, are prepared for. We have to ride this airplane ride for this long duration because it's going to pay. Now here's another long-term perspective. Again, looking at it, 0.05. We are down here in no man's land, 0.05. Never been this cheap before. Commodities in relationship to the S&P 500, which means that we have the greatest opportunity in commodities that we've ever seen in commodities. That's why I'm excited about this. We're throwing valuation buy signals. We're throwing downtrend break signals. We're throwing even intermediate to short-term charts that look insane to break to the upside eventually. Everything's starting to align here. That looks fantastic. Now here's the CRB index. We broke the downtrend line in terms of the index itself, not a ratio, and it's moving on higher. Could this pull back more? It very well could, but nothing would be broken in terms of technicals. It would just be short-term volatility. Now looking at some of the ratios, different ratios, this Dow to gold ratio, we've been breaking through here. It's been in this kind of upward channel. Will this break down? I think so. The way that I've got this drawn in here, this was on a gold standard back between 1914. Stocks were outperforming. I think they've outperformed enough. I think we could potentially even dip down to a 1-to-1 ratio. Stocks are that overvalued and commodities are that undervalued. Looking at some of this other stuff like a real estate to gold ratio. Now, I don't know if this is going to come back up or if this thing's going to dive all the way back down. Tough to say, because in a commodity bull market, gold's going to outperform real estate. And I think we're going to see this compress even further. Even though this chart looks like this, I still think we're going to compress. And we may compress to a very low number before moving higher. But we'll see. But on this ratio here, if gold is cheap to the Dow and real estate's cheap to gold, that means real estate is an incredible deal right now. And I know people are going to say that's crazy, but in historical terms, real estate's never been cheaper. Well, I should say it's been a little bit cheaper, 2011 and 1980, but in overall context since 1890, we are cheaper than, I would say, 80 or 90% of the time. Only 10% of the time it's been cheaper or less. So we've really, it's on the cheap side for real estate in terms of this ratio, and it's very, very cheap in relationship to stocks. Now here's the oil to gold ratio. I like looking at this thing. This thing looks fantastic. We've got a wedge pattern. It's kind of declining a little bit, a slight declining wedge pattern from 2000 all the way over, and we just broke to the upside. We're turtle heading, peaking out. This thing breaks in this oil to gold ratio. We're going to see oil go a lot higher. And I'm positioned for that move. I'm positioned for oil to go a lot higher. But this here is an indication that we're probably going into a commodity bull market. An alignment this big with this much time behind it, this basing pattern is going to be a gigantic move. It's probably going to come all the way back to its peak of 0.15 oil to gold ratio over the next 5 to 10 years. Or however long this takes. It might take 3 years. I don't know. Maybe it takes 2 years. I'm not wound up about the time frame. I'm looking at the overall structural moves that are coming. And this here looks fantastic. Could this come and do a little bit longer? Maybe. It could. But this to me looks like it's ready to break to the upside. We've got this nice alignment in this pattern here. Looks fantastic to me. Here's the gold to silver ratio. We've got this kind of big pattern. Now, this isn't going to break to the upside. There's limitations on ratios. This thing's not going to be, gold's not going to be able to buy thousands of ounces of silver. What I think is going to happen is we're going to break to the downside and stay and come lower. That's what I'm looking for. Doesn't mean that's going to happen, and I don't have a time frame on it. I'm looking for a break to the downside. Now here's gold to copper ratio. When copper outperforms gold, it means that the economy is strong. I've been looking at jobs, different types of jobs. There are a ton of jobs out there. Oh my goodness. I think the economy is turning around by looking at just how many open jobs there are all over the place, at least in the cities that I'm looking at. But when we compress this ratio, this is the last bull market, we compress this ratio, it's saying that a commodity bull market is coming. This isn't signaling deflation. Deflation is when this ratio moves up like this in this deflationary collapse. And deflationary collapses don't last very long. This is a recovery phase all over here in real estate, and now we're going into an expansion phase where copper compresses against gold. It is compressing, therefore we are more than likely entering a new commodity bull market. Now here's the platinum to gold ratio. Platinum broke out to the upside, and what do? We buy the back test. The back test is right here. It's back testing right now, platinum against gold. Right now, I would be looking at maybe purchasing a little more platinum because it's low right now, and we're back testing the downtrend. Here's platinum to palladium. Again, we broke out, we're back testing, and we're sitting right here. Perfect time for platinum. Platinum is a cheap metal in relationship to palladium. I don't think it's ever been this cheap in the history of all of recorded data. This is an opportunity, and it's just sitting there right in front of us. Now, if you guys are patient, if you can wait some years, this is going to revert back. This is a low risk, high reward play, in my opinion. And I own a lot of physical platinum, like the stuff you hold in your hands. If you want to play an ETF, go for it. That's up to you. Here's platinum to silver. This is signaling that platinum is cheap in relationship to silver even. If silver is such a great deal, people should be jumping on platinum. Platinum is, I mean, you can get 42 ounces, 1 ounce of platinum for 42 ounces of silver. That is unheard of. That's ridiculously cheap. And you know what? This is the paper silver, not even the physical silver. Now here's the price of platinum. I'm just looking at the price itself in dollars. We've got the two big patterns coming up. One big flag pennant pattern, another big flag pennant pattern that's developing. We hit our head on it and it's kind of pulling back a little bit, but I'm looking for a move to a break to the upside. We've got a massive long-term uptrend channel coming through here. We broke down on COVID, and guess what? It was short-lived. Do you think a greater event than COVID could come and disrupt this? If COVID couldn't disrupt it, if 2 months of shutting down the economy completely couldn't disrupt platinum's price move, the structural move is higher. I mean, this right here is proof in the pudding. I mean, this is like in your face getting slapped saying buy platinum, just slapping you. Now, I'm not telling you guys what to do. It's not financial advice. I'm saying the charts from a technical perspective look fantastic. I've never seen them this good. Silver, another big, massive move coming in silver. Cup and handle pattern, it's still scribing this out. This is going to take time, all right? It's going to take time. But when we break this move, man, you are going to be so happy that you're in it when this pattern breaks to the upside and absolutely launches higher. Opportunities are everywhere here. You got to be patient. Look at the big picture I've got here. And gold, same, look at gold. Oh my goodness. We got this nice kind of cup, little handle here, broke to the upside, and then we're doing another cup, little handle. It's ready to break to the upside at any second now. So all of these charts, guys, they're all ridiculous. They're all massive in size. They take time to play out. If you're viewing the stuff that's right here in front of you, all the movements, and you're getting twisted up with all the news and the YouTube, remarks and videos and channels, go back and look at this big picture. Go back and look at how big these patterns are. It's going to take time. It's a long, long plane ride. You guys are looking at the seconds. And if you're looking at the seconds, go. That's how long each second is when you're staring at the seconds. On this 24-hour plane ride, you're going to go insane looking at these short-term movements on a long plane ride. These setups are signaling inflation. They are signaling big moves are ahead of us because of the patterns. They're signaling that the valuations are low in commodities, and they're changing in a direction which is inflationary, not deflationary. If this was a deflationary crash, these patterns would be breaking to the downside. But everything's going and melting up. It's going to the upside. So in my opinion, and from what I see here, the dips should be purchased in the companies that you like that fit within your strategy, if it's an inflation strategy. I see zero signs of a long-term deflation. I see zero signs of a long-term move that is going to disrupt what we see here. Commodities are cheap in relationship to stocks. The real estate market is an expansionary phase with a large, large deficit of homes that need to be built, which is inflationary. And everything is turning and twisting in the ratios in a favorable direction for a commodity boom. That's about as best as you can get in terms of market environment and conditions and valuations for an investment kind of thesis. It's as strong as you can possibly get. And it's the entire reason I've opened this channel for everyone, is to help you guys identify exactly what's in this presentation. Take the big long-term view of this. Get the companies you like, create those lists, list them out, watch them, and see for good entry points. If the charts, if we get a big pullback and you feel afraid, like you want to sell out, do the opposite. If you're a new investor, do the opposite and buy it. Hey, look, things are tanking. Oh my God, everything's falling. Buy it. Get in there and slowly cost average in. Be methodical. Be a robot. Be methodical with your moves. Look at this. Be logical as you can and throw those emotions out the window. Throw them out the window. Don't listen to those emotions. Stick to your plan. Look at the big picture view. And if the short term provides opportunities for better investment entry points, take it. This is a 5, 10, 15, 20-year investment. You could even do this for 30 years. I think at some point we are going to run into mineral constraints. And I know that people think technology and design will just design it out of the product. Well, when 40 or 50 elements go missing or go short or go expensive, however you want to call it, they're going to have to design a lot of stuff out. And I don't think you can design everything. I think the quality of the product will be too far hindered by the substitution potential that you may not have the same product. Therefore, that product becomes, its utility to society becomes a lot less valuable. So there are some constraints to substitutions and design stuff, but what I'm seeing here, I am trying to buy more. I'm trying to buy as much as I can. That's what I'm doing. I'm continuing to cost average into my favorite companies. And I know you guys always ask, what are my favorite companies? But I'll go over another clip. Maybe I'll go over some of my favorite companies. Look at some of my older videos. I have, some of my companies that I own. I'm a big royalty guy. Royalties, diversified mining companies, and then get some ones that you can swing for the fences with. Because the returns here are going to be so big. And again, you can take the physical metal approach, swap metals around. Right now, platinum is on fire, man, in terms of valuation. That's the one that I really like is platinum. I buy the physical metal. It's a very low risk, high reward play. You get a little bit less volatility. You can't really sell this stuff very quick, which is actually good because it forces you to hold it. Because it's like, I'm going to go trade it in. No, it's cheap. You're just going to say, screw it, I'm going to hold on to it. It's going to force you to be more selective on your buy and sell points. If you have this easy thing where your emotions can overrun you, that's something that might not be good for a long-term strategy. You don't want to be ruled by emotions. So hopefully this helps you out. If you guys have any questions, please put it in the comment section. And thanks for listening. This is Finding Value.